The market just keeps going. Can't make it stop. How far can the upward momentum, though, take us? Let's go to Jared Blikre at the New York Stock Exchange for more. These markets, man, they just keep going, Jared.
I know. I was just looking at the Wi-Fi Interactive here on our global heat map, and this is another Superman week. If you're taking a look at this chart, it's up and away from the lower left to the upper right, up almost 4%. That's the NASDAQ composite. Looks like small caps giving a little bit back today, but the Russell 2000 up even more than the NASDAQ this week, and the laggard is the Dow. That's only up 2.3%, but I just want to show you what's been happening around the world, just to give you the sense of all-around bullishness. Australia, the All Ordinaries, up over 3.5%. You can take a look at what's happening in Hong Kong. That's the China proxy. That's up over 5%. Huge, huge burst there. What about Europe? Is Europe sick? Well, the London FTSE is up 3%. And let's take a look at the DAX over in Germany, just down nominally today, but up 3.5% over the 5 days. Now, let's take a look at what's going on inside the U.S. market, and here's our sector action today. Healthcare in the lead, kind of a balanced, some winners and some losers here. Let's take a look at the 5-day price action. Communication services in the upper left, that is the #1 sector, followed by tech, followed by consumer discretionary. Guess what? Those are the mega cap sectors, once again attracting a lot of cash. Here's a NASDAQ 100, NVIDIA up 11%, right there in the middle of your page. Amazon up almost 4%, Google more than 5%, Meta more than 7%. So what's going on here? Well, with the tame inflation report, we have seen the 10-year T-note yield really crash back to, after punching above the 4.0 level, crash back to substantially below that. I just want to show you a longer term chart. Here's a 2-year. We are in a sustained uptrend, so one might expect higher prices until otherwise proven, but this is just a big consolidation between what I'm going to call 3.5% and just above 4%. So that is still in flux with the big decision of where are we going to go long term. But the dollar has been cooperating in terms of the risk on movements. Let me dial this down to a three-month chart, and you can see really just crashing below the 102 level and gaining momentum to the downside there. So that's pretty impressive. You take a look at a 5-year chart, it's right there in the middle of the range. This is the COVID range right here. Early COVID, late COVID, right smack dab in the middle. In the meantime, stocks like the weaker dollar. So I'm going to go back to our heat map. Just want to check up on what's happening with the banks, and I'm going to put this back on an intraday. JPMorgan, what can I say about Jamie Dimon's comments? Pretty surprising to me. He almost seems surprised that we are not in a recession or that things aren't worse than they are, but he mentions the consumer strong, economic data still rolling in, things are weakening on several fronts, but JPMorgan, as always, the fortress balance sheet, able to protect and hedge against that, I guess. But I think his candid admissions is that we don't really know what's going to happen next. I would be more concerned about a Wells Fargo, which is up 3% today. Their earnings were good as well, but we head into a recession. That commercial real estate portfolio probably not going to be looking so good. But in the meantime, until we have another catalyst in the market here, I've been saying the market's on autopilot. We don't have a reason to add to positions or to remove them right now, because most of the big players already put their trades in motion at the beginning of the summer and they're just riding it out. So to them, give them a tip of the hat.